Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here's your daily technical analysis of foreign exchange markets. I'll start with the euro against the dollar. A bullish engulfing pattern yesterday, if only just. This counters last Friday's combined bearish opening Black Maribozo and bearish engulfing pattern. However, it does not counter the more important idea of the market being back below the combination of the upper time, currently at 113.95, and within the broken January to May bearish Andrews pitchfork, as well as being below the declining medium moving average, currently for 114.01. This has been very significant, as these two bearish resistances, though breached and broken, have again successfully kept a lid on the market and pressured it lower, something that started way back last year. However, the market has volte-faced and risen higher, closing over the following significant levels. The short-medium moving average, currently at 113.26. The lower trend line of the November 2021 to January 2022 ascending triangle, currently at 113.19. The neckline, currently 113.11 of the April to May reverse head and shoulders pattern. And finally, the interesting, that's April-May 2020, and finally the interesting 61.8% Fibonacci line of the March 2020 to January 2021 move at 112.89. All the action since the start of the year continues to be reminiscent of a potential pattern build-up, such as a diamond pattern or something similar. Unfortunately, it's still not clear, but it will become soon, and very, very soon. So far today, a small continuation higher, though the market is now seemingly hesitating ahead of the combined upper time and medium moving average resistance, unsurprisingly. Cable, aka sterling against the US dollar. An indecisive spinning top yesterday. Prices were still capped overhead yesterday as an absolute and on a closing basis by the upper time, currently 135.56 of the October 2021 to January 2022 bearish Andrews pitchfork. This was now the fifth day in a row on a closing basis. Meanwhile, below, we also still have support, again on a closing basis, from the combination of the 2019 high at 135.16, the flatlining medium moving average, currently 135.04, and a September 2020 high at 134.83. Whilst it may look as if the upper time of this fairly young bearish Andrews pitchfork is similarly dictating the play in this market, I would however point out that the market is actually getting squished in between this upper time and the previously mentioned supports below. This situation cannot continue much longer, maybe by the end of this week or the latest early next week. Meanwhile, I have droned on internally about the longer term whole of 2021 double top pattern, Adam and Eve type. The original targets were an initial target X2 in the 133.60 area and a secondary target X3 in a 131.10 area. The target X2, the initial target, has already been reached late last year. Target X3, the secondary target, is still out there. As you can imagine, this target is just so much harder to reach. So far today, a further attempt higher. That has breached the upper time, but so far has not really exploited it to any degree. The next resistance overhead is the high last week at 136.43, which is close to a lesser Fibonacci level at 136.54. But more importantly, it is the upper trendline extension of the July to November 2020 sideways triangle, currently 136.71, which is entering the frame, as well as the declining long moving average, currently 136.89. Euro sterling. A reactionary bullish white soldier yesterday, which sets up nicely for the last three trading sessions to be a possible bullish morning star pattern. Now we shall see on that if this comes about. The move back up was brought on by the proximity below of the congestion between 83.60 down to 83.36, plus the broken but potentially still potent lower falling wedge trend line, currently at 83.32 of the old August to December 2021 falling wedge pattern. We now have overhead the declining short medium moving average, currently at 84.13, and a little further up the medium moving average, currently at 84.43. I suspect the medium moving average is the stronger of these two. Finally, with just under half of February to go, it is interesting to see that we're already set up for a possible monthly key reversal in February. If we close on the 28th, either over 8,400 or under 83.50, then we'd be on. Right now, we are looking at a possible monthly key reversal up, though it is, well, we'll move back in actually to an outside month, sorry. But we're so close into moving into a monthly key reversal up. Now, so far today, a higher opening with a dip down just below the short moving average, kind of 83.83, but also a higher high than yesterday, if only just. This lack of ascent is once again due to the proximity overhead of the declining short medium moving average. US dollar against the Indian rupee. A big key reversal down yesterday. It was a strong reaction to the previous 5 bullish sessions and was prompted in an area other than the October 2021 high at 75.67 that is pretty devoid of resistances. The market closed back down below the October 2021 high at 75.67, the April 2021 high at 75.56, the August 2020 high at 75.31, and the lesser Fibonacci line at 75.19. This move down also counters the idea of looking at the 2022 action as a possible bullish halfway hesitation. However, there is a possibility that the action since the start of this year could be morphing into a possible rising wedge pattern. This will soon be tested as an idea as prices are approaching the lower wedge trend line, currently at 74.83. What is especially interesting is in between the market and the trend line, we may have some significant supports in the form of the flatlining short medium moving average, currently 74.90, and the slowly rising medium moving average, currently 74.32. So far today, a follow-on lower to yesterday's key reversal down, a satisfying one. As already mentioned, we are now approaching not just the lower rising wedge trend line, but also the short medium and medium moving averages. Below this, we now have nothing of note until the 50% Fibonacci line, the April 2020 to February 2021 move at 74.63. US dollar against the Brazilian real. Bearish open and close black Mariposa yesterday, with the lowest low and low close since September last year. There was also a second bearish black crow and a more than suitable follow-on lower to the previous session's immediate countering bearish engulfing pattern. This time, the market punched down through and closed below the last of the Fibonacci-based band of congestion between 520.27 to 526.79. The market ended up closing in a fairly support and resistance-free zone that extends all the way down to the 510.87 lesser Fibonacci line. What is more important is the market still kept within the cone of the early January to date declining broadening wedge pattern, currently 527.53 to 491.46. This wedge pattern, as detailed in its name, has been dictating the move lower since about, mid-January. US dollar against the Mexican peso. A third bearish black crow yesterday, though it was also a lower indecisive spinning top. I think that's the more superior pattern. I can see why the indecision has hit the market. It is because the market has now stumbled into the supports below of the lower time, currently 20.3630, of the new September 2021 to January 2022 bullish shift pitchfork, plus the nearby slowly rising long moving average, currently 20.3305. This caused the stuttering dip lower with a close still above both supports, though only the lower time had been breached yesterday. So far today, another attempt lower, dipping below the breached lower time, but still falling shy of testing the long moving average below that. Now, under the long moving average, we have the 2022 low at 20.2660, though I'm unsure how strong this would be without the aid of the long moving average. We then have the lows at 20.2377, 20.0066, and 19.92. But the next sizable support will be the extension of the lower trend line to the July to September 2021 descending triangle pattern, currently at 19.9742. Thank you for listening. This short version broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright is Tofpik and ADM Investor Services International Limited. And here comes the final bit.